Hey guys. So great to see you all. Yeah, and me coming on a few minutes before midnight. Didn't plan for that to happen, but I was working on some things for sure. So welcome. And if you are watching the replay, which most likely you will be, go ahead and click the replay button. And if anybody comes on, hello. I had to think about something I could talk about just off my dome. So we're going to talk about cash flows, three types of cash flows, and the difference between cash accounting and accrual accounting. Some of you that use QuickBooks and maybe do your own bookkeeping, there may be a question on there that asks, hey, do you use cash basis reporting or do you use accrual basis reporting? So we're going to talk about the difference between accrual basis and cash basis. So it's very so most small businesses use cash basis, and the reason why is because it is definitely easier. So you don't report the income until you receive the cash. So for instance, a small company or any company, right? For most of the companies, let's just say that, right? Most of the companies that aren't on the New York Stock Exchange, they use cash basis accounting. So what does that mean as far as your business? So say for instance, you're in coaching. Let's just throw that out there. Hey, you're in coaching and you send an invoice to a client. And let's just say you send an invoice today in July. So you send an invoice in July and you don't get paid until August. Well, if we were to do accrual based accounting, the revenue would be counted when the invoice was sent, not when the money is received. So, again, if you're in business and you send out invoices, accrual basis accounting says, I report it as income or revenue as soon as I send the invoice. However, cash basis accounting says, I'm not going to report that as income until the cash is actually paid to me. So, for instance, again, for reporting purposes, let me use this example. If I sent out a $5,000 invoice for today, and they didn't pay me until August 1st, well, the thing is that under accrual basis accounting, it's going to show $5,000 revenue. However, if I were to use cash basis, it's not going to report that revenue until August. So that's the difference. And the same thing, except on the flip side of expenses. I love teaching this. This is like probably one of the harder lessons that I teach in accounting. So, but I like it though, right? So, accrual basis versus cash basis when we're talking about expenses. So, for instance, the IRS prefers the cash basis. So that means that we want to bring it into tax terms is that one of the things and one of the strategies that, and kind of got to be strategic, but people do it all the time. If they are wanting to have bigger tax deductions, they learn how to adjust when they pay their expenses. So, for instance, if they know that they're going to have a big profit or a big taxable income or a big profit in their business to where they have to pay taxes, they may go ahead and prepay for some things at the end of the year. So December 31st, they're thinking about what can I buy in order to reduce this tax bill. So they may go ahead and expend a lot of cash, even though it may be for the future years, but because the IRS uses the cash basis, it works. So yeah, so they use that. So that's the difference between cash basis and accrual basis. Just FYI, I am talking about the three types of cash flow. And we're talking about mainly as far as a corporate setting and even a business setting. And even if I wanted to bring it down personal, which I will do that, there are three types. The first type is going to be your operating cash flow. Your operating cash flow in a business is all the cash that you need to operate. So those are what you normally sell in order to bring in money. So if you sell a widget, I forgot, Gen Z, newer generation looks at widgets as the thing on your phone, but I mean like products or something like that, right? So it's the money you get in for running your business, and it's the money you spend of running your business. So it's going to be like your rent, your utilities, your different things like that is going to be part of your operating cash flow. So even if you think about it in your personal sense, you can use operating cash. This is crazy. Like, I'm super tired, but like I said, I will talk about cash flow. Who does that? Anyways, um, could have thought about some more light, I guess, but oh well. This is my brain this late at night. So, anyways, operating cash flow. So, in personal, you can look at operating cash flow as far as your own personal budget. So, the money that you make from your job, the money that you make, yeah, let's just keep it there because I could go a little bit deeper. But the money you make from your job versus the expenses that you have in order to run your household, your transportation, anything that it takes for you to gas money, anything that it takes for you to go through to operate, right? Your operating expenses. So that's what operating cash flow is. If it's positive, that means you're doing pretty good, right? If it's negative, then you got to look at some things to cut or some things to increase. So that's operating cash flow. The second type of cash flow is going to be your investing cash flow. Now, I'm going to bring it down to the personal sense. This is where you are investing into bigger assets. So, for instance, a home, right? A home, like if you buy a whole house, 300, 400, 500, $1 million, you're not going to put that into operating cash flow. You're going to put that into investing, right? But if you don't use cash, you don't have to worry about it. Um, Even to bring it down on a personal level, stocks. If you buy stocks, that is investing cash flow. So if I invest in stocks, that's cash leaving my personal accounts in order to invest, right? When I sell those stocks, I get that money back. So that means that is what's keeping the investing cash flow is whenever I spend money to buy things like stocks or assets or retirements, right? If I'm spending money on retirement, I won't say spend, but investing. If I'm investing into retirement or stocks, then that means that is an investing cash flow, right? Sometimes when we're investing into assets, we're not going to see an immediate um, cash back, right? Like if I invest into a stock, unless you're doing like day trading, but if I invest into the stock, hold on to it for about a year, 2 years until it grows, then I'm able to claim a lower tax rate, which is capital gains. But again, what I'm doing is I'm you it's almost like a buy and hold process, right? If you have to put your money into a retirement, well, that's investing, right? If you're putting your money into stocks, that's investing. But the good thing about investing into those types of assets is the fact that if you were to buy a home or if you're looking at your net worth, then your net worth will increase because your assets are increased. Because if you think about net worth, you're looking at the amount of cash that you have, the amount of assets, if you have a house or if you have stocks or you have retirement. They look at all that and add that up is to calculate your net worth. And so that's your investing cash flow. The third one, because we talked about operating, that's like what it takes to run your life, right? And then second is your investing, that you're investing into different properties and assets in order for you to grow them in the long run, on a long term. And then the third one is financing. Financing on a personal level, again, is where you are getting loans, right? You may get a loan. So if you get a $10,000 loan, and it may look like you have a lot of cash in the bank, but it didn't come from operating. It came from oh no, not investing, unless you sold stock, right? It came from financing. So you may get a loan and have an influx of cash. And so loans, what else is there? That's the main thing I'll say, because I think that's the main thing I could think about as far as on a personal level and a business level. We could talk about people buying your stocks, different things like that. Like if you're the company and people are buying into your stocks, then that's financing. But on a personal level, Loans is what's financing. So whenever you go to a car lot, hey, will you be financing this vehicle? That means, are you going to get a loan? And so those are the three types of cash flow. So for instance, operating cash flow needs to be very healthy. So in order for you to like run your life or run your business, the operating cash flow um, has to be good. And then also investing cash flow, you may dish out cash, but the thing is that you're expecting a return in the long run, right? So that's investing. That's how I think about it, right? Like stocks, bonds, real estate properties. Like you got to think like that's investing cash flow. Like that money's gone, but hopefully that return will come back. And then financing, you're thinking about loans, right? You're thinking about how to fund what you got going on. And normally the financing helps with the investing at times. So, anyways, those are your three types of cash flow. And another term that I wanted to bring out is something called, man, I'm sleepy, y'all. Woo, what was that? Okay, that was off of a light. So I didn't even touch that. So yeah, that kind of scared me. But the next term I wanted to talk about was free form, like free cash flow. And what free cash flow is, I'm trying to make sure, see if there are no questions. Free cash flow is when you have cash flow that doesn't need it to be designated to something. So if you have cash flow, what companies do is they have to designate that cash to maybe a building or a down payment on a building or something like that. The goal is to have some free cash flow to where it's not necessarily designated to like a certain purpose that you have to go, but like it's something that you can actually use discretionary. It's like free cash flow. Okay, I can use this cash to whatever. But I would say that it would be good that whatever income does come in, that you divide it up, right? And we'll talk about allocation later, but those are your three types of cash flow. So I know I definitely need to be sleep. And so I do got a early morning tomorrow. So I will talk to y'all later. God bless. I don't see any questions either. So God bless.